Welcome to our deep dive into the world of oil benchmarks. If you've ever wondered how crude oil prices are determined, this video is for you. In this video, we'll explain what oil benchmarks are, explore the major global benchmarks, and uncover their significant impact on the oil market, including their benefits and challenges. This content is for anyone interested in understanding the foundational elements of global energy pricing, from students to industry professionals. By the end, you'll have a clear grasp of how these benchmarks shape the world's most critical commodity. Oil benchmarks are reference prices for crude oil used by buyers and sellers globally. They are essential for pricing, trading, and risk management in the oil industry. They help determine the value of various crude oil grades, ensuring consistency and transparency in the market. Without them, pricing would be chaotic and inefficient. There are three primary global benchmarks you need to know: Brent crude, West Texas Intermediate, and Dubai crude. Each plays a distinct role in different regions. Brent crude is the most important global benchmark, particularly for oil traded in Europe, Africa, and the Middle East. It originates from the North Sea and is priced on the Intercontinental Exchange, or ICE. Its global accessibility makes it a key indicator. West Texas Intermediate, or WTI, is the primary benchmark for the U.S. light oil market, sourced from oil fields in the United States. It's known for being lighter and sweeter than Brent. WTI futures are traded on the New York Mercantile Exchange. Dubai crude is particularly significant in the Middle East and Asia. It represents the pricing of heavier, sour crudes, crucial for refiners in those regions. Now let's explore how these oil benchmarks profoundly affect the broader oil market. Benchmarks enable buyers and sellers to establish a price reference for diverse crude oil types. This allows for clear pricing relative to the benchmark, with agreed-upon differentials based on quality, transportation, and supply and demand. By providing a consistent and transparent pricing mechanism, benchmarks contribute to greater stability and liquidity. This makes it easier to trade various crude oil varieties, reducing uncertainty for market participants. Many crude oil sales under long-term contracts are priced based on these benchmarks. This ensures consistency in pricing for long-term agreements, vital for planning and forecasting. Benchmarks are crucial for financial instruments like futures and options. They allow companies and investors to hedge against price volatility and manage risk effectively, protecting against unexpected market swings. Benchmarks attract significant, managed money and play a vital role in broader financial markets. Shifts in oil prices can influence other asset classes, making benchmarks key economic indicators. Benchmark prices reflect global supply and demand, geopolitical events, and economic forecasts. They are key indicators of the health of the energy sector and the global economy, providing insights into global stability. While Brent, WTI, and Dubai are primary, there are other important benchmarks worth noting. The Dubai/Oman benchmark is crucial for heavier, more sour crude from the Persian Gulf, especially relevant for Asian markets with high demand for these types of oil. Henry Hub is the benchmark for North American natural gas and global liquefied natural gas, or LNG. It's vital for gas pricing and trading across the continent. Understanding these oil benchmarks is fundamental to comprehending the global energy market. They bring transparency, stability, and efficiency. Oil benchmarks are truly the invisible backbone of global energy commerce. They bring clarity, structure, and efficiency to one of the world's most complex and geopolitically sensitive markets. First up, let's talk about price discovery and standardization. This is where benchmarks truly shine. Benchmarks offer a common point of reference for valuing the vast array of crude oils produced globally, which all have varying properties like API gravity and sulfur content. This standardization simplifies pricing for both buyers and sellers and allows for the calculation of, quality spreads between different crude types. Next, benchmarks are vital for market liquidity and stability. By providing a widely accepted pricing mechanism, benchmarks contribute to increased market liquidity, making it easier to buy and sell oil and related derivatives. This increased liquidity also helps to promote greater stability within the overall oil market, reducing wild price swings. Third, benchmarks are indispensable for hedging and risk management. Oil producers, traders, and consumers use benchmark futures contracts to hedge against price volatility and manage financial risks associated with future oil deliveries. This is a critical tool for ensuring more predictable revenue streams for producers and managing costs for consumers. Fourth, benchmarks play a crucial role in investment and analysis. Investors and industry stakeholders use benchmarks as a baseline for evaluating and trading various crude oil varieties. Financial analysts and media also rely on these benchmarks to discuss the overall price of crude oil and its impact on the economy. Finally, let's look at the global pricing influence of these benchmarks. Benchmarks like Brent crude are widely used to price a significant portion of the world's oil, influencing prices for crude from Europe, Africa, and the Middle East, while WTI serves as the primary benchmark for the US market. Other countries and crude types often reference these major benchmarks with an agreed-upon differential. In conclusion, oil benchmarks are the invisible backbone of global energy commerce. They provide clarity, structure, and efficiency to one of the most complex and geopolitically sensitive markets in the world. Understanding how they work, from Brent and WTI to Dubai and Murban, is essential for anyone involved in oil trading, energy policy, or simply interested in the global economy. Thank you for watching.